So you have sell side liquidity, buy side liquidity. You have I mean, you could even look at this as a higher time frame consolidation, right? But sell side liquidity swept out here. Expansion. That's your most recent stop on reversal point. Sell side liquidity. Take that, measure from dealing range low to high from the secondary retracement. This is your buy side liquidity from the hourly chart. Trace into that, you come down into discount. So this is what this blue line is. Into discount. So you have liquidity sweep into reversal pattern seeking discount of the dealing range high to low. So you can see we dip lower into the consolidation order block. So we have a consolidation zone in here, 50%. Here's your 50% candle. Dip into that, candlewise respecting it, climb, retrace into a retracement factor with a fair value gap in here. Dip lower, you can see the consolidation in here as well. Draw the order block. This candle dinking up into it. There's your sell as well. You leave it. Expand lower into the sell side here, as well as the dealing range discount with the fair value gap paired as well, which I believe more importantly is the consolidation order block in here. So oh no, not really. High to low in here. It's your breaker as well. Low, high, lower, low. Swept out liquidity. Trade back into it. There's your unicorn setup long right here. With the fair value gap paired right there as well. Right. Here's your mitigation block layered on top of the breaker. Draw that out. Buy long. Wait, am I tripping? Oh, I am tripping. But yeah, disregard all of that. Here's what we're looking at. Oh no, never mind. Okay, well, just disregard it. Whatever I don't know what I was talking about. Into 50%, yeah, the order block down to here. So you can just edit all of that out, I guess. Into the sell side liquidity, discount dealing range, and the fair value gap from 830. Then you have reversal, so you target premium, which would be this low to high, since liquidity sweep to liquidity sweep is your low to high. Then it goes back into 1505, 15015.5, right into there, tapping into the order block in here, right into here. Then you have another consolidation factor right in here. Here's your order block. Down close candle for the move up. Respect it there magically. Trade back up into the order block here. Running out the buy side liquidity. Into this order block from the consolidation. Trades back lower for sell side liquidity, as well as this is a stop hunt, right? This is a stop hunt to previous stop hunt. Here you go. This is where it gets intricate. Low to high, target discount. So there's your stop hunt right here. So you look at this price leg. So anything below this 14,998, you have sell side liquidity down here, which would be your first target, I guess. And then sell side liquidity down here. Next target. Then what do we do? We have consolidation in here. Expand lower, reversal, target discount of the stop hunt to stop hunt. That's your previous dealing range, right? What do you see? Buy side liquidity right in here. as well as the reclaimed fair value gap in here, as well as the breaker block in there, filling the entire gap, the imbalance. Then return back lower. So buy side liquidity ran it out. Then we return lower into more sell side. Here's your stop run hunt right there. And I'm pretty sure, once you look at that, stop hunt to stop hunt. And what do we do? You have some consolidation in here. Going to measure low to high. Get a little run past that, past this, but continue up into discount. What do you see here? Order block lined up with discount, and fair value gap lined up with discount. Right in there. Reclaim fair value gap. Now the reason you use this reclaim fair value gap, because we just did IO fed it, so there's gap to be filled here. That's why you also use a reclaim fair value gap in here, right? There's more of a gap to be filled, so you return back, buy side liquidity, fill the entire gap, and return lower into the sell side liquidity. Now when do we return lower? After all of this has been balanced out, right? You have that tiny gap that's mostly unfilled. So first gap mostly filled there. Then you have this gap breakaway because you close below the old selling in here, right? So if you look at this as a market maker sell model, you have old selling in here from the first side of the curve, second side of the curve. You have a candle that closed below the old selling here and below the old selling in here. But if you just use this and then use this, so we forget, I guess we did technically close, but you can see the candle buys all respecting this order block right in here. No, this is so tiny. Order block right in there, respecting it down to the sell side. Build more of the gap. Then you have retracement into the premium of sell stop or of stop rate to stop rate. Then what do we do here? Turn back lower. Tapped into the order block there. Into 50% of this. Right there, right? Because this is a stop rate. Technically. So that's the liquidity stop rate. So stop rate to stop rate. Turned into 50% of that. Right, this line. Turned into this gap. Turned back up. Didn't have any stop rate here. What does it return into? Order block. Reclaim fair value gap, or inversion fair value gap. Still wants to seek sell side. So that's the narrative. Wants to seek sell side from the larger time frame. Right, so stop rate down here from the daily sell side liquidity. Measure that all up to this buy side liquidity stop rate on the hourly. It's wanting to seek the sell side or the discount of that dealing range. So you zoom in, that's the bias. So think about that. We just zoomed all the way out. Now we're just zooming into the fractal of price of what it's going to do. Market maker sell model in here as well. So we're tracing to there. Stop rate to sell side liquidity, continue lower. So we're expecting that sell side run in continuation. Go further for London expansion model in here, right? What do? We have consolidation in here as well as in here. But consolidation from here to here. Bullish order block the lines of 50% right in there. Now I wonder if that would have been a Cameron model. Stop read. Breaker in here. I already mentioned this. Consolidation. There's your break. 46. 54. So there could be a macro between 150 and 210. It's also liquidity ran right there. See if all the elements of price are in here. So I'll say liquidity purge. Tracement into fair value gap. Run it to buy side liquidity. And what is to buy side? Oh my gosh. Look at this. Sell side down here. Run that out. What do we look for? Buy side liquidity. Turn it back down into what? Discount. Back into discount. What do we do after the retracement? Expand away. Expand, right? Which is this expansion into the order block. This order block in here, I guess. Oh my gosh, look at the precision there. What is this? So we trace into discount, expand to the order block of the consolidation in here. Low end, think it, move lower into the sell side. This is so weird to me. Down at the sell side. That traces into. So this is something I had to study. This goes into retracement of the dealing range from buy side to sell side. I guess we are expecting that, right? Got a stop right up here. With the reversal, or with the retracement into premium. Back into 50% of the range. So internal to internal. Right? Yeah, internal range liquidity to internal range liquidity to external range target means external range expansion. Gotta write that down, I think. Right, so internal to internal to external. Internal? Wait, no. Internal? Internal plus external. So internal LQ with the sell side there to external LQ to external DR plus internal LQ equals reversal. Or does that equal retracement? Might equal retracement into 50% of stop hunt to stop hunt down to here. So external scaling range retracement into 50%, right, with this line right here. Then retracement, right, into 50%. Is that what the picture says? Let me look. Yeah, retracement. Then that's a internal range retracement leads to, what does retracement lead to? Expansion. Oh, retracement leads to expansion. Wait, no, retracement into here. How does it lead to expansion? I mean, expanded lower, but I would expand. Wouldn't you expect an expansion higher? But we got a retracement to expansion. Internal range DR retracement. So this is a retracement. So external range retracement plus the internal range liquidity. The external takes over. So retracement, internal range reversal. We'll say that. External range retracement plus internal range liquidity reversal equals external range expansion, right? Because look how we expand now down into further sell side. Look at that expansion move right there. I think we don't. Okay, that's key right there. So I'm assuming that there's an equation for each of the models, and you can just math it out. It's where price. What is it? Where is it? Price is likely to go where price came from and where it wants to head right now. So where it's likely to go would be the sell side, because we just took out the buy side. Right? Am I doing this right? Yeah, let me look. I wrote this down. Oh, I wrote it down. Just give me a sec. I don't even know what I was doing now. Yeah, there's an equation for each. And I'm sure this all respects the old buying and selling over here. All the old buying and selling. So this is the equation for market maker buy models and sell models. This equals market maker X model, because you want to expect SD, so standard deviation expansion away from opposite liquidity. So what I mean by that is if you're expecting an expansion, external range expansion. So if you get an internal buy side liquidity run into 50%, still get a market maker sell model into the external range liquidity, right? That might be the the model for market maker X model. Yeah, I think that might be it. I'll have to backtest that. Um, what else? Into there, you have expansion. So expecting a disrespect of this PD array, trades back up into it with the inversion for value gap. Plus you have a sibi in here and old selling order block or old buying, right? So you look at old selling, never mind. Old buying, order block, boom, sell, expansion. 4 standard deviations, I'm sure away. Let's see how many. So you take target, oops. There's your 1 standard deviation, 1.5 standard deviation. So understand? So this is your expansion leg for your, this is your retracement leg here. If you're expecting external range expansion, you use your standard deviations, get -1 standard deviation, boom, right there. Okay, this is gonna fly over people's heads. Oh, there you go. External range expansion right here. What do you see? External range liquidity run with a retracement into dealing range high to low. There you go. With the liquidity stop run. Technically here and here. Expansion lower into sell side. Yeah, reversal with breaker. Boom. Into there. You're already sub sell side, so you're going to be looking for the dealing range high to low. Oh my gosh, it's all sticking now. Here's your previous liquidity run on the higher time frame. Previous liquidity run on the lower time on the no. Previous liquidity run on the higher time frame. Previous liquidity run on the higher time frame. This is the sell side liquidity here, right? What are you also dipping down into here? Dealing range discount of the sell side liquidity run from the higher time frame up to the buy side liquidity run from the higher time frame. So you're dipping into sell side but below discount, right? So if I can measure it out, I'll show you. Look, sell side liquidity or sell side liquidity in blue. Then you have your low here. Gotta zoom in all past this. Here's your 50% right in here. 1482 4.75. There's your discount right in there. Sweeping sell side liquidity. That's also aligned with it. And what do you see here? This is a retracement into 50% while sweeping internal range liquidity. So you'll expect expansion away from opposite liquidity. So your opposite liquidity would be your buy side in here. Oh my gosh. Buy side liquidity in there. So that's your internal range plus external range in here is your premium. So you're retracing into fair value, premium, completing the market maker buy model in there. Now, if I had to expect, we have liquidity run to liquidity run. So you would take, assuming you're not using this high, but if you were, you'll see a run down into 14910.5 as probably expected, right? And here you would see roughly around closure of the new week opening gap, if I'm correct. So I want to see almost full closure of the new week opening. So target, I'll put this in daily bias for tomorrow. We'll see what happens. So 2 a.m. analysis. Want to see 14902.75 or 14910. So we'll say 14910 just to be safe. With tomorrow price action. Okay, so we'll see about that. But that should make sense, right? Tracing at 50%, that's an internal range of liquidity. Or you could even see the sell side possibly down back here, but that's also high resistance. So you would see 50% retracement. After retracement follows what? So we could get consolidation after that, then you just wait, bro. Alright, we'll stop the video there.